Good evening, ladies and gentlemen. Welcome. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Thank you for joining us for a special investor briefing where we'll be looking at NCB's new and exciting APO. On the panel with me today, we're joined with Mr. Robert Almeida, CEO of NCB Financial Group. Welcome, Rob.
Thank you.
Additionally, we have Angus Young, CEO of NCB Capital Markets. Welcome, Angus.
Thank you.
Online, we're also joined by Ian Chinapu. Welcome, Ian.
Good evening.
And Ian is the CEO of Guardian Holdings Limited. And last and certainly not least, the beautiful Dr. Karen Hepburn Malcolm, Head of Wealth Management at NCBJ. Welcome, Doc. How are you doing?
I'm good, thank you.
Thanks for joining us. Well, folks, if you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content like this just about every single week. And if you want to embark on your very first investment journey, take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, let me tell you guys a little about NCB if you don't know already. NCB Financial Group is one of the strongest financial powerhouses in the Caribbean, with a footprint in 20-odd territories across the region. Through its subsidiaries, it offers an array of financial services, including personal and commercial banking, wealth management and investments, life and general insurance, fintech and treasury, and correspondent banking for individuals and companies. It was incorporated in April 2016 as NCBFG, and it's a financial holding company for the Clarion Group Limited, NCB Holdings Limited, Guardian Holdings Limited, NCB Bank, and NCB's other wholly owned subsidiaries like Capital Markets, NCB Insurance, and the Fund Managers Limited. 2FOB 2021 Limited, an NCB-owned fintech company which introduced Link Mobile Wallet, provides customers with convenient peer-to-peer transfers directly from mobile devices. And we'll definitely be talking about that. Okay, so first up, I'd like to have Rob give us a presentation about the NCB APO so we can have a better understanding of what you guys are trying to achieve, and then we'll certainly have some question and answers, folks, at the end of the program where we'll discuss it in greater detail. So Rob, over to you.
Great, thank you very much. So to start and give you a little bit of perspective on what we're doing, I'd love to start with a quote from our group chairman, the Honorable Michael Lee Chin, OJ. And he says, NCB is the people's bank. Therefore, the people should own the bank. There's a saying, if you buy the milk, you should own the cow. I call on all Jamaicans to participate in our APO. And so that's directly from the Honorable Michael Lee Chin. And our main call to action on the APO is it's about owning a part of Jamaica. To put the APO into context, you got to start of the purpose of investing is to create wealth. So why should anyone invest in NCB shares? The purpose is to, or any shares for that matter, it's to create wealth. And why? Why do we want to create wealth? We want to create wealth for our security, for our lifestyle, and for our legacy needs. How do you create wealth? You create wealth through ownership of quality businesses. And then lastly, the next question becomes, what's a quality business? And we would assert that it has two great attributes to it, two very important attributes: capital preservation and enduring growth. Capital preservation because you want to know that you're investing in a business that'll be around 5, 10, 15, 20, 25 years from now. And it has enduring growth because you'd like to see your wealth grow over time. So to speak about those items very quickly, let's just start with capital preservation and NCB. NCB's first number one attribute strength is its scale, unrivaled scale of $2.2 trillion in assets, which is about the size of the top 8 companies in Jamaica combined. In addition to scale, NCB also has market leadership. It's a market leader in Jamaica in banking. It's a market leader in insurance in Trinidad. And so market leadership in its major product lines in major markets. In addition to scale and market leadership, NCB also has a diversification across geographies and a diversification across business segments. So our product lines are diversified across payments, life insurance, health insurance, banking, mortgages, etc. And our products and our business lines are diversified geographically: Jamaica, Trinidad, the Netherlands, the Dutch Antilles, Bermuda. So in addition to scale, market leadership, and diversification of products and diversification across geographies, NCB has also been time tested. We've survived many things over the last decades, and more recently, 2 debt exchanges and a global pandemic. And through all of that, NCB has grown and grown from strength to strength. Just looking over the last 5 years, our operating income has grown at a compound annual growth rate of 11% per annum. And that's through a period with a global pandemic. So moving on from the attribute of capital preservation, the next attribute is growth. So what is going to fuel NCB's growth going forward? First and foremost, it's important to think about a financial institution, and the financial system is a reflection of the real economy. So an NCB being a systemically important financial institution in Jamaica and in many of the markets in which it operates is basically a reflection of the economy. So how goes the economy, so goes NCB. How goes NCB, so goes the economy. And so one of the biggest reasons to invest in NCB Financial Group right now from a growth perspective is the country, the markets, the region is actually poised for growth. A number of things have happened over the last number of years, and in particular in Jamaica, you would focus on the fiscal position and the much stronger fiscal position of the country. You only have to drive around Jamaica to see all of the construction activity happening, to see the windmills, to see the solar farms, to see the roads, the highways being built, and all the buildings and housing developments coming up everywhere, to know that there's growth in the country. And similarly, across the region, there is growth in the region. When that happens, people need mortgages. They need loans to grow their businesses. They need working capital loans. They need to pay more employees with payroll services, group health. They need health insurance for all of those employees. All of those things are financial services that NCB provides. So when we look at the growth of NCB going forward, we see it coming from, like I said, a few different areas. First is macro growth. And second is we're getting it because NCB, given its scale, has the opportunity to capitalize on the economies of scale. Because we're so big, we have the opportunity to be the lowest cost producer and bring that efficiency to the customer. So that is our number one strategy. The next element of our strategy is, while we bring our costs down, we're also growing because we have the opportunity, because we've got this breadth and reach across multiple geographies and in many product lines, that we can bring the convenience of a one-stop shop, a comprehensive financial solution to clients so that they don't have to go to multiple providers to get all of their financial needs met, but we have the opportunity to give them all of those things in a one-stop shop. And so that's the second growth opportunity for NCB. And then the third growth opportunity for NCB Financial Group is, if we're being the low-cost provider and we're providing the convenience, we have the opportunity, and this is the best part, we have the opportunity to help clients create wealth. And the wealth creation is really important because it's big for clients. It's a very important thing for clients, but it's open-ended for individuals, for companies, and for a country. There's no limit to how high wealth can grow. And if we can help clients grow their wealth, the entire system grows, the entire market grows, and in so doing, there's more of a need for wealth management. So it becomes a virtuous cycle. And so that's kind of, if you were thinking of this in layers, there's low-cost provider, there's one-stop shop, and then there's wealth creation. We started on this reset at NCB last July, and our first quarter results suggest that we're on the right track. Our earnings in the first quarter were just under $6 billion of consolidated profit, and our net profit attributable to stockholders of the parent was about $3 billion. So we're well on our way to achieving the kind of targets that we aspire to get to, that we are targeting to get to in the near term, and hit those metrics like a 15% return on equity, hit those metrics like about, just under about a 10% growth rate. Those are the types of things. We've restored the dividend. We intend to see the dividend continue and to see it grow over time. And so that combination of consistent profitability, sustainable growth, and satisfying all of our stakeholders, being customers with great products and services, shareholders with dividends and shareholder returns, and the country and the markets in which we operate with wealth creation. So just to complete this quick update on the NCB APO, the APO provides a unique opportunity to create wealth by becoming an owner of NCB FG, an owner of something that is integral to the market of Jamaica, the owner of something that is integral to the market of the Caribbean. As I mentioned at the beginning, wealth is created by owning businesses that have the attributes of capital preservation and enduring growth. NCB Financial Group has those two attributes in a very strong way. And probably the most attractive reason that makes this the best time to do this APO is the APO price represents a price-to-book multiple of less than 1, which is historically, very, very low by historical standards, where price-to-book has been as high as 3.38, and the APO is priced at around 1. So investors have an opportunity to buy and own a piece of the financial system in Jamaica, in the Caribbean, and to do so at a very attractive price. So that would complete the presentation on NCB.
Thank you, Rob. I appreciate that. I got 2 questions for you personally. So, in the world of CEOs, can I think of you as a night's watchman, or are you going to be around for a while?
I've been involved with NCB since 2002, when Michael Lee Chin first acquired control of NCB.
22 years.
22 years, and so I have a very strong commitment to the success and the enduring growth of NCB. So I wouldn't call it a night watchman. I definitely intend to make sure that NCB fulfills its promise.
Appreciate that. And in 1 minute, tell me a little bit about you, your history and background.
I'm a chartered accountant by profession. I started off in the retail industry, which curiously led me into, in supermarkets, and I was running strategy and logistics. But in the process of that, we developed a strategy to go into banking. And so in 1998, I launched an electronic bank for Loblaw companies in Canada in conjunction with CIBC. And so that was in 1998. In 2000, we took that down to the US. And I've been in banking and investments since 2002. I've spent the last number of years focused very much on private equity investing. But being in banking now since 1998, I still think of myself much more as an investor than an operator. But having said that, I've been kind of around operations of banks for over 20 years.
Appreciate that. Now, I first met Rob over 10 years ago, and folks, I have to say I am impressed with his experience and knowledge. He's a chartered accountant like me, so that doesn't hurt, but he's a great guy, and I really look forward to what you guys are going to do at NCB. Additionally, on the panel, we have Mr. Angus Young, and we intend to ask him the same question, folks. So Angus, you're now the CEO of Capital Markets.
Yes.
Same question for you. Are you just a night's watchman? Are you here to stay? Tell me a little bit about your background, buddy.
Sure, absolutely. So Dan, I would have started investment banking at a very young age. I don't know if that was a blessing or a curse, but I was out of university at the age of 20. So I started university at 17, was out at 20, and entered the working world soon thereafter. Over 2 decades in the industry, Dan, and I am 46 years old. So it's been a while. I don't think, unless Rob and Mr. Bowen have other plans, I don't think he's a night watchman. I'll share with your viewers that my family and I moved from Trinidad to Jamaica, made Jamaica our new home in December 2023. So we're here enjoying Jamaica and in full flight, so to speak.
So you're here to stay?
Absolutely.
Good deal. Okay, so folks, coming back to the APO, just a quick summary, and I'll ask the guys to bring up the slide at the appropriate time. You guys are going to issue 78.5 million shares with the right to upsize to 117 million shares.
That is correct.
That's between 3% and 4.6% of
That's
your
correct.
stock. So
that is correct.
It's a relatively small issuance.
That's correct.
I mean, raising $7 billion for NCB should be relatively simple.
Sure.
So I got a few questions for you.
Absolutely.
First one up is why $65? Now, Rob told us about the price to book, and I kind of agree with that. It's, but
Sure.
why 65?
Sure. So having landed here in Jamaica for just over 4 months, Dan, it's very, very important for me to understand and appreciate domestic nuances in market behavior, etc. And I've learned that in the world of Jamaica, investors expect APOs to come to market at a discount, right? A discount to market. But I would say this to you, with 20 plus years in investment banking, half of those in a leadership role, I will always tell my team that in this part of the world, if you want to play the long game, you stick to the fundamentals and you tweak for domestic nuances. All right. So in July 2023, share price was $65. there was an intervention. NCB FG 2.0 kicked off. And we've done 4 strategic, deliberate fiscal pivots in that time, Dan. The first one is in October 2023, we slashed 8 billion Jamaican dollars in recurrent expenditure. Okay. That's a lot of money. That's 50 million US recurrent expenditure done. The second thing we've done is we would have announced the divestment of a non-core asset being our bank in the Cayman Islands. We will remain in the Cayman Islands through our broker-dealer and serve our clientele there, but we are in the process of divesting NCB Cayman Bank. Okay. That a sale purchase agreement has been executed, and that is before the Caymanian regulators for approval. Okay. The third strategic initiative that we share here is that we identified 15 billion Jamaican dollars in excess capital in our OPCOs, and our OPCOs are all regulated. Okay. So that was excess capital that we identified and upstreamed to NCB FG. And the fourth initiative, Dan, is the APO. So all the 3 initiatives that I mentioned before are way down the wicket, some fully executed already. The APO was the fourth.
Great. So these are all of your initiatives about strengthening the balance sheet, future-proofing the business, as you said, Rob, and focusing on growing.
It's a focus on boosting resilience. It's a focus on strengthening the capital base, preparing for new regulatory environments, and of course, the world is an extremely volatile place and we think that's going to continue. Volatility is the new normal.
Absolutely.
So bolstering our capital bases and just making sure that NCB FG remains extremely resilient is a main focus for us. I will also share with the audience that the 4 initiatives that I mentioned, the use of proceeds of the capital that we gained access to is to de-lever NCB FG. So for example, the APO proceeds will go to paying off NCB FG debt. Okay. In so doing, we breathe the right amount of oxygen and injection of adrenaline into NCBFG, so it becomes a lot more agile and it could be a lot more opportunistic with organic and inorganic opportunities.
And if I can just add to, the question was about why the price of $65, and Angus started off with saying, back in July it was $65. A whole lot of stuff happened, and the price is still $65, which means, as I said, the long game. The value's been going up. The price is still at $65, and that's consistent with the market expectation of getting something at a discount.
Yeah, absolutely. And to be fair to the market, interest rates are sort of very high right now. I can put my money on 30-day government CD and earn 10%.
Yeah, of course.
And a lot of big pension funds are sort of just riding that wave. Sure. So we fully expect that as interest rates come down, we all know the story that the stock prices will come up, PEs will come up. And so I think NCB is suffering from that, as many other stocks in the market are suffering from that.
So absolutely, Dan. So why I was mentioning all of this, we've done all this work, right? And the math is there, as proved in, don't take my word for it, the Q1 is there. You soon have Q2. But there are also several third-party independent broker valuations that were released this week that put the price, the immediate intrinsic value in the mid to high 70s. So don't take my word for it. The beauty of the opportunity is we're still at 65, right?
Yeah,
and therefore there is some distance between perception and reality, which creates an environment for unleashing value. So when the market has a different opinion between perception and reality, there's value trapped in there. We think that an earlier announcement of a much larger APO would have created some stagnation in the price and the trading. That's out the door now, because this APO that we're doing here is the only equity raise we intend on doing.
This is it.
This is it.
Foreseeable future.
This is correct.
Good.
So what I'm saying to you is this is finite.
Good.
You know what the deal is.
Good.
We've done the work. This difference between perception and reality exists, and we believe that putting the APO through the market is going to release that value.
I totally agree. You mentioned Q2 results, so I wish we had them today. Can we get you guys back Monday or Tuesday to go over the Q2 results?
Absolutely.
Good. Because Q1 was impressive. I mean, I saw $3 billion, 120% increase over the prior same time. But, I kind of got a $5 billion quarter expectation, so I really want to see what the Q2 numbers are. I know you can't speak to it now, but folks, NCB is at pretty much a 5-year low. And this is a stock that traded at $150 for 3 years solid. and justifiably so. The company has made as high as $28 billion profit, but even at $20 billion profit per annum, $5 billion a quarter, my expectations, is Dan Theok, the analyst speaking, this is a $90 stock in your sleep. And indeed, I think the path to getting back to $120 is 12 months out, in my view, with interest rates likely to come back down, and if they can get to $5 billion per quarter. So I really look forward to talking about the Q2 results, because I do think there's great value. I'm conflicted. NCB is personally my largest investment in my portfolio. I loved the stock 8 years ago at $60. I liked it 5 years ago at $90. I liked it 4 years ago at $120.
So now you're in love.
I'm in love. I can't buy any more personally because I'm up to my limit.
Understood.
It makes up 15% of my entire portfolio, so my stock portfolio, that is. But I love the stock, and it's something that we strongly recommend that you buy. There are very few opportunities, in my opinion, in the Jamaica stock market today, stocks that are valued by maybe 50%. Very few opportunities. I, Dan Theok, personally believe NCB is one such stock. It's a great company, as you guys said, poised for growth. We've seen the CAGR over the last 5 years, 11%, through the 2-year pandemic period as well.
Correct.
Too. So it really is one of the strongest balance sheets around, great leader in the market, both in Jamaica and in Trinidad, as you said, in the insurance segment. And so I'm excited about the future of NCB. Glad to see this behind us, because I really thought you were coming with a $20 billion APO. Not that I thought that was an issue, but we thought with a $20 billion APO coming, we'd be able to get the stock cheap. And I think the market kind of thought that as well, too.
I think, Dan, the success we've had in the fiscal initiatives kind of, goal seeks the APO amount, and that being the last initiative to be executed, I think that's why we are where we are now.
Good deal. So why an APO and not a rights issue?
Oh, absolutely. So it is very difficult, Dan, to do a financial transaction in Jamaica, and whether directly or indirectly, not touch the NCBFG ecosystem, right? So it's just systemically important, systemically relevant, right? So what we wanted to do, one of the aspirations that Rob would have defined, is to broaden the investor base of NCBFG. We think that we're so ingrained in Jamaica that every Jamaican should have the opportunity to own a part of the Jamaican economy. So, you could also look at the APO, Dan, as a way of democratizing access to ownership of a piece of the rock, so to speak. So an APO, number one, we want to broaden the investor base. Number two, the use of proceeds of the APO, the vast majority of it, aside from transaction execution costs, is all going to liquidating debt. All right. Now the NCBFG shares cross-listed, so it's on the $J platform on the Jamaica Stock Exchange, and it's on the $TT platform on the Trinidad and Tobago Stock Exchange. The reason we chose to do an APO, aside from wanting to broaden the investor base, is that because the use of proceeds is going to liquidate debt, we don't have any debt at NCBFG in TT dollars. The debt is in mostly J dollars and in US dollars. And given the use of proceeds, we want to raise J dollars because it's going to pay down debt. We don't have debt in TT dollars at NCBFG. So that's the primary factors as to why we chose to do an EPO.
Okay, very good. I appreciate that. And that makes good sense. What's the background and rationale behind NCB's decision to launch? No, we did that one, so forgive me, guys. So do third one. Third question for me. How will this affect existing shareholders?
All right. So I mean, you actually covered it earlier. If you're an incumbent shareholder and don't subscribe to the EPO, your potential dilution is circa 3%. If the transaction is upsized, it could get as high as 4%. And I say high, just because there's an increase from 3 to 4, but that's not a lot. That's immaterial. So that would be the effect, to be quite frank, if you did not participate and you're an incumbent shareholder.
Good deal. But having said that, I really do still feel this is value accretive to all shareholders because you're taking the funds, using it to pay down debt while focused on trying to grow the business.
So we would have done the math, right? And we would only proceed with initiatives that are accretive to the shareholder.
Good. Good. Okay, I appreciate that. And how does this APO align with the group's cost management strategy?
So, I mean, this one I'm going to steal from Rob, right? So back in the day, meaning mid last year, we could have had efficiency ratios as high as 80%, Rob,
Yep.
right?
Yep.
Which means only 20 cents on the dollar you get to keep, right? In terms of revenues, right? So we want to get to best in class, and we're focused on the 50s. But let's just say we land at 60 in a year's time, right? Effectively, if we went from an 80% efficiency ratio to a 60% efficiency ratio, we would double our profits. We're just managing the cost, the cost and the efficiency ratio.
And you've taken out $8 billion of costs already.
$50 million out the door.
Right.
So we're on our way.
Good. Again, I'm looking forward to the Q2 results, folks. Now, when you look at the trailing earnings of NCB, for those of you who are going to do that math, I mean, it is clear that in your fourth quarter of last year, as part of your restructuring, that you guys incurred about $10 to $12 billion in sort of one-off separation costs, realignment costs. Again, those are one-off costs.
Sure.
They're not going to repeat.
No.
And in fact, you've gone one step further. You've taken out $8 billion of
That is correct.
costs.
That is correct. Of recurrent expenditure.
Yes. Yeah, I appreciate that. And so once again, I'm looking forward to seeing the Q2 results. What are the potential risks that you can think of or benefits to shareholders from this APO?
I can't think of any. The risk is that you miss out. Right? I don't think you're ever going to see primary issuance from NCBFG at $65 ever again.
Yeah.
All right. There is, this opportunity to get in at this price, and there's only one way in terms of. So remember now, price is what you pay.
Yeah.
Right. Value is what you buy. All right. So I can't claim that that's Warren Buffett, right? So what I would say to you is this: the price is in your favor. The value is in the math. It's there. The difference is that perception between reality and perception. And that's the value that's locked in there. And I think this APO is going to be a catalyst to open it and unlock that value.
Yeah. Please, Rob.
Yeah, if I can add a piece to what Angus said, that the greatest risk is to miss out. And we can say that, kind of like tongue-in-cheek, it sounds kind of funny, but it's actually a really important point, because we live in marketplaces where everything is relative.
Yeah.
And the biggest risk we have at most times is to miss out. It's like if you're in a neighborhood and you don't own your house and the price of real estate goes up, well, you're left behind. And so it is a very real and a very important consideration, I think, for people to have, is you need to be an owner. And Jamaica is doing well. The region is doing well. NCB is going from inefficiency to efficiency. NCB is poised for growth, and the stock price is low. And so if you miss out, it's not just as simple as saying, oh, I missed out. It was kind of, it's funny. It's really important not to miss out. And I just wouldn't want that risk to just fly by people.
I appreciate that. Good deal. Of course, folks, the prospectus is on the Jamaica Stock Exchange and on NCB's website, I presume, and we encourage you to read that prospectus in full so you can fully appreciate all the risks of the business that they've highlighted there. That's very important, but I really do think the biggest risk, like you guys said, is to miss out on this opportunity. So like I said before, I bought this stock 8 years ago at $60. I bought it at $90. I bought a little bit more at $120, and then I hit my capacity limit, so to speak. But it's a stock that I'm in love with, and I really look forward to the future growth. And folks, I really want to come back in 12 months' time. I'll change my name to whatever you want if the stock hasn't cleared $100 in 12 months' time. You guys out there get to choose a name for me. It could be mud, but I feel very confident that we won't have a problem. I feel very current there. Doc, carry on. You've been quiet online. I've got a question for you. I want to appreciate what is the group's growth strategy going forward?
Okay, thank you, Dan. So the group is focused on wealth creation, and I would say by extension, pension fund management. It's no secret that we are a big player, if not the largest player, in many of the spaces that we already operate. So when you think of us as a deposit-taking institution, you think of us in banking, payments, insurance, and the list goes on. And so there's a very big opportunity for us to be a major player in the wealth creation space, not only or purely because of the benefits increasing your off-balance sheet portfolio brings, but I would say in a very patriotic, almost altruistic sense, NCB has decided to reconnect with the reason why, for example, the chairman bought the bank in 2002. It's a part of it is to build a better region, and for us here in Jamaica, building a better Jamaica. I want to share with you and your audience, there was an article written recently on a gentleman called Roxroy Carr. It's called Sky's the Limit. And Roxroy serves as an example of what we want to do. I know when you think wealth creation, you intuitively think of the affluent and the high net worth clients, and that's great. That's a very profitable segment. But we also want to make sure that we're creating wealth for the average person throughout the region. So the story with the Roxroy Carr essentially is that on the same day that the chairman bought the bank, he went to a Half Moon Hotel. There was plumbing issues in the villa. He met this plumber who asked him, how to become wealthy. And the chairman shared the principle about finding a mentor, figuring out the recipe, following the recipe faithfully. And essentially, the chairman shared that his mentor was Warren Buffett, and he followed up with the plumber over time, espoused those wealth creation principles, and now that plumber is a multi-millionaire in US dollars. So I use that specific example to say that it shows that anybody can create wealth. Wealth creation is there for everybody to capitalize on, and so the APO is one way people can look at creating wealth through purchasing the shares, but we want to share the general wealth creation framework with every single person. So no matter what you do, no matter if you're hovering around the poverty line or if you're already wealthy, if you're already a high net worth client. So that's one of our major focus for the group going forward. And we've done it in such a way that it touches all the revenue streams that we already have, all the platforms. So when we meet with, whether it's a corporate, an institution, or government entity, the conversation becomes a very wholesome conversation, looking at how their debt is structured. Can we improve that? Looking at if they have protection via insurance. Are their pension needs covered? Do they have an investment portfolio? So that in a nutshell is this big focus of the bank, wealth creation.
Great, thanks for that. I appreciate that. Back over to you, Angus. So we've been operating in a relatively high interest rate regime, and that's obviously had some negative impacts on the bank. I mean, what's your expectation going forward over the next 6, 9, 12 months as interest rates come down?
Sure.
I mean, how do you see that impacting the bank and the performance specifically?
All right. So what I would say to you, Dan, is this. When, of course, Q2 is going to be released later this week,
Yeah.
right? My expectation is that you would see a validation of the current run rate.
Okay.
And what I would like to share is that to validate that run rate in today's environment, there's only one way to go, and that's upwards,
Yeah.
right?
Yeah.
So we're cognizant that there's an election due in the US in late this year. We're cognizant that inflation is sticky. So I would say that this environment is going to be around for a while, because if the Feds were be tempted to reduce rates, it may look like it's being facilitative to politics.
Mm-hmm.
And if they were to do the opposite, they would have a similar effect. So I think it's going to be higher for longer. And what I would say is, when we validate our run rate in this environment, there's only one way to go. I've also noticed that corporate earnings in Jamaica are on an upward trajectory, and the distance between the stock market at best being flat and corporate earnings going up is just value building. And when that inflection point comes, Dan, even without growth strategy, it will release value on the Jamaica Stock Exchange.
Yeah, absolutely. And I totally agree with that. I mean, there's over $150 billion of money just sitting on 30-day CDs. And I don't think they're there because they want to be there. They're there because they're not necessarily seeing value in other places.
But you have to place the bet now,
Yeah,
so to speak,
absolutely.
right? So remember, when everyone is fearful, be greedy.
Yes.
When everyone is greedy, be fearful.
Exactly. And so that's why I do think this is a great opportunity, folks, to get in at $65 while you can, because I'll be shocked if it's anywhere near here in 6 months' time. And so with those of you who are satisfied earning 10% per annum on 30-day CD, I think you need to think about making the switch sooner rather than later. Again, when we talk about market leader in scale, 2.2 trillion in assets, over $600 billion in deposits, I'm sure, perhaps over $600 billion of pension fund money under management. I mean, this bank is huge, really, Angus.
Yeah, we have 35% market share for deposits in Jamaica. We have 33% market share for repos in Jamaica. And in Trinidad, our insurance segment is, I think, 34% market share.
Wow.
Ian will expound on it later, but Ian sells more life insurance than some of his competitors.
Wow, that's amazing. Well, speaking of life insurance in Trinidad, Ian, tell me, what impact has the adoption of IFRS 17 had on GHL's preparation and reporting of its financial statements?
Oh, good evening again. The adoption of International Financial Reporting Standard 17 has been probably the most fundamental change in the insurance industry globally for 20 years. In fact, the last standard, IFRS 4, has been there over 20 years as an interim standard. But what does that mean? It means that a lot of effort, a lot of technology investment, a lot of work, in fact, over the last 4 years, Guardian Holdings has been investing in the needed technology, the training, the systems to actually evolve the preparation of its financial statements under IFRS 17. But IFRS 17 has fundamentally changed the disclosures and what goes into the various line items. So, I mean, probably too much to get into here, but we have certainly on our website put up a lot of information around what are the changes in the disclosures. It's a lot more. If you look at our annual report online, you would see the annual report is 3 times the size in this year as it was prior to adopting IFRS 17 because of the amount of disclosures and reporting. But most importantly, what we're seeing here is that the way that the recognition is accounted for has changed. There's more of a matching approach to recognizing the revenue and profitability of the company. And that means there's a significant amount of our profit that used to be recorded in the early years that is now going to be accrued or reported over time. But notwithstanding that, it doesn't change the economics of the company. It doesn't change our cash flows, our ability to grow dividends. But the reporting and the comparability of IFRS 4 and IFRS 17 is very, very different. What we have done is publish our 23 audited financials and our 22 audited financials under IFRS 17, so you can do a good comparison. What has happened? We've grown our insurance revenue 12%. We've grown our profit 47% year on year, 23 over 22, and that continues into Q1 2024, which is all available online. So I don't know how much more you want me to get into it, but essentially it's a fundamental change in the preparation and reporting, but the group is doing quite well and contributing to our major shareholder, I think, quite significantly. Our market shares, Angus mentioned, is actually 40% in the life insurance business, 35% in the property and casualty business, Trinidad and Tobago. We also have significant market shares in all the markets, major markets across the region, including the Dutch Caribbean and Jamaica. And we're growing our market share in Barbados and the OEC markets, where we intend to get as high as in the major markets. In some markets there, we're in the teens, some are in the single digits. So we have opportunities for growth in Barbados and the Eastern Caribbean, and also in Jamaica. We're in an industry that is even more important today and in the future. The world is not getting less risky, it's getting more risky. And we're in the business of helping people manage their risk. So we do believe, and an appeal, that people look at the quantum of their insurance. Most people are either underinsured or uninsured, and there's a great opportunity here for people to look at their financial future and leverage us to reduce their risk in the future. So we're here, we're doing well, and we continue to invest to grow our customer experience, to improve on our efficiencies. We've actually, just to contribute, we've actually, in 2023, in addition to our normal efficiency moves, we actually reduced our cost by 1.2 billion Jamaican in 2023 in our operating expenses. So our operating expense ratio went from 26% in 22 to 23% in 23, and actually at the end of first quarter, quarter-on-quarter comparable, we're at 21% in the first quarter of 24. So we're moving in the right direction. And of course, as Angus said, there's a quantum impact, a multiple impact on profitability when you reduce your expenses.
Thanks for that, Ian. Could you tell us what specifically you guys are doing to improve your operational efficiency, and what type of profitability returns and growth can we expect in future for GHL?
Well, we've done so much. In the last 4 years, we've invested significant amounts in improving our technology. And this is all within the framework of the pillars of our organization, which is efficiency, governance, and customer experience. So some of our efficiency moves have been to reduce the time it takes for us to settle claims. We have over 80% of our claims across the group now in our property and casualty being handled within 3 days. And of course, we intend to do even better in the future. We have been actually reducing, as I mentioned, our cost to income ratio, and we have not reduced the service levels that we've been able to give our customers. We've invested in digital technology, our C360 platform, where you can actually go online and do end-to-end transactions, which will, of course, save you time, save you cost, and actually get you to, especially for those who are doing renewals of policies, etc. So we've invested heavily in your experience in terms of that. In terms of our profitability, we are now doing over 6,000 policies in the first quarter. So you're seeing more and more policies being able to be processed faster, which will, of course, redound to the benefit of the bottom line, because we're now getting our customers onboarded faster. So the shareholder will also benefit, our policyholders benefit, and we've also introduced greater technology in terms of monitoring our investments and being able to respond in real time. And you'll have seen that our investment income has actually grown significantly year on year as well, where we've actually tripled our investment revenue in the last year. So all of these things are really not only about encouraging and training our people, it's our investment in technology and the ability to respond faster, and doing all of that and still bringing down our operating cost to income ratio by 3% in 2023 and a further 2% in the first quarter.
Well, thanks for that, Ian. You are exactly how I remember. I think we crossed paths more than 10 years ago. It was either at Citi or CIBC.
That's correct.
Yeah.
When you were in your prior roles, so I will never
When I was
forget
in
the
my
name
prior
Frank.
role. And I will never forget the name Ian Chinapoo, and you guys clearly doing a great job over there. Angus, I'm impressed with the team, I must say. And this is difficult because I know the Jamaican folks were used to the prior team, and some people kind of felt like they were irreplaceable, but I really do think you guys have put together a great team. I reserve my comment until I see the Q2 results, which we're going to see Tuesday, folks. I've said that 5 times, so they better be good. But in wrapping up, what I can say is there's a great opportunity to get you guys some NCB stock, $65, that are all going into the company to bolster the balance sheet, help reduce debt, future-proof the business, support the growth initiative. It's a stock that, in my opinion, is substantially undervalued. And as soon as those results come back, which we sense they're coming back, they've told us they've taken out $8 billion in recurring costs, and we had over $10 billion of one-off costs 2 quarters ago. So it's just a matter of time before the trailing earnings get back to where they need to be. And then with interest rates coming down, in my opinion, in the next 6 months or so, I really see this stock at over $100 in the next 9 to 12 months, or we're going to change my name to Mud or whatever you guys want to call it. So Ian, I look forward to having you guys back.
Thanks, Dan.
Rob, likewise.
Thank you.
Ian, appreciate your contribution online. And Dr. Hepburn, Malcolm, likewise. And with that, we'll bring today's discussions to an end. And I'd like to thank our viewers, as usual, for tuning in and for supporting the program. Big thanks to Robert, Angus, Ian, and Dr. Hepburn, Malcolm for stopping in today and sharing their invaluable insights about NCB. And hopefully you guys are just excited as I am about NCB. That's why it's the largest investment I have in my personal stock portfolio. This is like for real. And although it's down relative to where it was at $150, I have no doubt in 2 years' time it'll be back where it should be. Like Carrion said, I'll be able to confess of my exposure to Michael Lee Chain and it making me a multi-millionaire in US dollar terms. Maybe I'm there already. I can't say my wife will kill me or take half of what I have. Either way, I love NCB stock. So again, if you're curious about future updates on our virtual investor forum, then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. So give us a follow to learn more about all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to get our notifications. Well, wise investors, please remember, slow and steady wins the race. Keep safe. Goodbye.